Okay, here's some more serious ideas. You can see a number of my essays deal with this topic. There was also a time I was interviewed by some former Googlers on the topic. You can search my name with the essay title, as always. No paywall, never monetized, always open source. This one is coins that are chips. I don't I don't know an easier way to say this because people really aren't going to like this concept and there's a lot of mental baggage around it, but we used to have it where a coin, a metal, either silver or gold, was the real dollar. And then you'd get a piece of paper that was backed by that dollar. So up until just a few decades ago, you could take your piece of paper dollar to the bank or the mint and exchange it for the real metal coin that was the actual dollar. So that's a gold backed or silver backed currency. So the gold or the silver coin was the real dollar, and the piece of paper was just a receipt. But we got rid of that. Well, we didn't. Nixon did. But now it's just the piece of paper, and there's no coin behind it. So it's not backed by anything. It's a fiat currency where we just say it has value, and people believe that, and I guess that's working for now. So instead, we would prefer to have a dollar that is backed by something because that's a more reliable source of value. But we don't want to use gold or silver. That's been done. It has its own problems. What we want to back the dollar is capital equipment. That's the general concept. We want some kind of machine or something that creates value to be the actual dollar. And then the piece of paper is a receipt that you can trade in to get that machinery. But we want the machinery to be something that we're actually going to be using all the time. If we used cars to back dollars, then that would lead to an overproduction of cars, and then the cars wouldn't be producing value anymore because we'd have too many. Most of them would be sitting around doing nothing. So we want to pick a form of equipment or machinery to back the dollar that is going to be used all the time. And then, here's the key concept, that machinery gets used to create real value, real economic products that are actually valued by businesses and customers. And so it collects revenue from producing that value. And a portion of that revenue, contractually, a dividend, is transferred into the pocket of whoever holds that paper receipt dollar. So when you go to the bank and you turn in your paper receipt, they're going to look at how long ago that receipt was issued, and they're going to accrue a certain dividend based on how much per year the equipment was earning. So we want to pick a form of capital, a form of machinery or equipment that produces real value. And when we choose this, we're going to start producing a lot of it. So we don't want it to saturate easily. And there is one kind of equipment that fits the bill perfectly. And now you're going to get angry. It's computer chips. We have computer chips themselves be the real dollar. This is not crypto tokens. Crypto tokens is where you use a computer chip to make a really long number, and you spend a lot of compute energy to make that number, and the number doesn't actually do any real stuff, but then you pretend it has value. That's Bitcoin and all the other ones. So just because it's rare, suddenly it has exchange value, but it's not feeding anyone, it's not solving any problems for real people. It's not running web pages, it's not scheduling for your business, it's not running inventory assessments or anything like that. So crypto tokens are derived from computer chips, and they produce no real physical outputs of value. They are only valued because of their rarity. What I'm saying is to use the computer chip itself stamped as currency. So this computer chip is a real dollar. It wouldn't just be $1. At this point, it'd be $1,000. But you could take $1,000, go to the mint, and say, I'm turning this in for its real chip-backed dollar chip. and you'd get your chip out of it. But when you're leaving your computer chips in the bank or wherever, that's a server farm. So all the data centers with all their stacks of computer chips, they would be like a bank where they are generating revenue for businesses and customers, and then you have a contractual dividend that you receive for owning that chip. And you could use a blockchain token to be the receipt so that you have an accurate tracking of when that chip was issued and how much of a dividend you've gotten off of it. That's fine, but this is not a crypto token. The percentage dividend that you're given is set at auction, just like with a treasury bill. And that's going to indicate to the server banks, the companies that are running these server farms, it's going to indicate how much of a demand there is for their chips as an investment vehicle, because people want to hold dollars as an investment. And also they're going to be able to compare that to the level of demand for the compute coming out of the chips. How many businesses and customers want to use those chips for processing. So suppose you have a stack of greenbacks, normal US dollars. You would send those to the server farm and you'd say, I want to buy computer chips as chip-backed dollars or chip dollars. And the server farm would say, well, we would expect growing demand soon, so we're happy to take your dollars and we're going to convert those into computer chips, which are registered in your name as your ownership, and we're going to give you this blockchain token receipt showing when you were transferred these chip ownerships and how much of a dividend you got at the auction. So they take those dollars, and then all the server farms that are authorized to do this by the US Mint would then send that money to the US government. And the US government's going to take that whole bundle of cash and bid at auction for chip demand globally. And the US government could throw some of their own cash in to subsidize that purchase so that they are issuing a bid price for computer chips that outbids everyone else to guarantee that they get all the chips on the table, just like poker. So the US government receives all these chips, they mint them, they stamp them with a number, serial number, and they're registered. They're sent to these server farms. The server farms have a contractual obligation to give you a certain percentage dividend from the revenue that that chip generated. And that percentage was set at auction when you sent your money in. So the US government gets a benefit because now they can capture the global supply of chips into US authorized server farms. And they are the ones who are backing the contract for the dividend. And the server farms, they get to build out their capacity without having to go into debt markets to finance that capacity, which avoids an AI bubble. It means they can scale faster at the pace they need. And then the final thing is that investors all over the world would prefer to hold these chip dollars to get that guaranteed dividend instead of local treasury bills. You've got the rate of return on many countries' treasury bills. It's very low. And people are investing in those treasury bills just to have a place to put their money without a risk of losing all the value. So with a chip-backed dollar as a second form of US currency, we would be pulling literally trillions of dollars from foreign investors, most of them countries and major international institutions, would be funneling a bunch of money into US server farms where the chips are the currency. Now, I know people don't like the server farms because they've been doing exploitative practices. They're not doing environmentally sustainable practices. There are a lot of issues. I'm with you on all of those. So making the server farms a durable way to generate value for each investor at an affordable rate, where you can take a few $100s and put them into an investment and get a steady return as a retirement pension portfolio. That's a better option, and it would give you leverage to insist that those server farms operate in a way that's sustainable and that respects the communities where they're operating. It would also finance American dominance of global compute, which is better than China having all the chips. So that's the, you can look up, one of the essays is Chip Back Dollar Grand Strategy. And that talks about the rate of return for a U.S. government subsidy in terms of the value it creates for the whole system. If the U.S. government spent $500 billion over 10 years subsidizing chip purchases at just 5% of the final cost, then they would be able to outbid all the other chip buyers to grab the majority of chips on Earth into U.S. hands. So it would be our authorized server farms that would hold all those chips, and we'd be the ones gatekeeping AI and everything else, which has a huge advantage, comparative advantage economically against our competitor countries. So if it's a 5% subsidy from the US government, then that's going to afford about $10 trillion in chips, which means they lost out on 10 trillion and we gained 10 trillion. So it's a delta of 20 trillion from an upfront cost of 500 billion, which is worth it. And then most of that funding is coming from foreign hands. Foreign countries and major international corporations would be the ones financing our build out. And that's worth it.